Hello, everyone. Welcome back to another episode of Backstage with Builders podcast. Today, with me, I have someone who has spent the last decade shaping how lending works across emerging markets. Ashok Auty. He was one of the original architects behind Apache Finrack, the open source core that powered modern digital lending. He later co founded Finflux, a cloud lending platform that scaled to millions of borrowers before being acquired by M2P Fintech, where he led the post acquisition transition. Now he's building Lokta, a connected credit infrastructure designed to help banks, NBFCs, fintechs launch and scale lending products seamless. Now his work sits at the intersection of technology, credit, and human possibility. And he's someone who believes lending is fundamentally about trust and access. So thank you so much for joining the podcast, Ashok ji. I've already given you an introduction, so I'll just jump right into the questions. The first question I had for you: you've spent over a decade building lending technology for banks, NBFCs, and fintechs. The main thing I wanted to know is what originally drew you into this world of digital lending?
Okay, so it was not a digital lending. In
Okay.
fact, initially when we started, so when I grew up in my village and all, when I saw my around, so a lot of people didn't had a formal access to the financial services. So a lot of
Hmm.
people underserved or unbanked. That's where we wanted to, how do we bridge that gap is
Hmm.
what I was looking for.
Right.
Then we saw that microfinances are working towards that bridging that gap, but they didn't had a good technology. That's where I'm coming from the technology background. I thought how I can help those guys. Then we went on building a product for microfinances, and we made that as open source. That is one of the well-known open source in the fintech industry. It's called Fineract. It's being widely used by many of the world-class digital lenders as well as financial institutes across the globe. So that's how we got into the fintech side. When we started that time, the name was not there, fintech, digital lending, and all. So it was just financial services and technologies.
No, that makes. I think people still go with that. It's like fintech is still new, so I think people still just go run with that.
Yeah,
That's amazing.
a lot of fintech term has come and the
Yeah.
startups came. When we started, nothing was there.
No, that makes sense.
Yeah.
It's like you are like you were there basically during its like before even its foundation, essentially, right? Like you were like building in this space. That's amazing. And you've said something peculiar because I was like reading your profile and just doing the background information what I
Mhm.
do, right? So and you mentioned like lending is really about access, trust, and possibility. Like how did that belief form for you?
So when we saw, right, many people in rural areas,
Mhm.
so they didn't have access to finance.
Right.
So when through these platforms, if we are able to underwrite them properly and we are able to bring the financial services to them, it's for their basic needs, day-to-day needs, or to do the income generation, right? When the loan, they got a loan just to buy a buffalo and generate some income through those buffaloes by selling the milks and repay the loans, right? That's where the trust which was built in, right? And that was the peoples who started trusting NBFCs, and NBFCs also started trusting people to give them a loan, and that has improved significantly in their life. Like it might be a small ticket loan, right? Today if you buy iPhone and all, it's like people are buying iPhone on loan or
Yeah.
buy now pay later. That's just for having some gadget and all. But in the microfinance segment, it's completely different, right? They take loan for their livelihood to do some income generation. That's where it brings the trust between the both entities, where the borrower who is repaying on time and improving his livelihood. This is how the trust is bringing in.
That's such a good reason because then you are allowing people to have that access to
Yeah.
build that livelihood to begin with, right? Like nowadays, like people are just using it for iPhone and such, and people are also like moving forward using it for food, like buying
Yeah, yeah, yeah.
pizza, buy now, pay later for that, right?
Yes, yes.
So that makes sense. That makes sense. And your company, Lokta, it
Mhm.
also describes itself as like India's connected infrastructure, right? What does
Yeah.
that essentially mean? And like, what does connected lending or like connective infrastructure actually mean in practice?
Okay. See, lending was there, like way back in 2010 and all. The lending, to manage the portfolio, we needed a software, right?
Mm-hmm.
Then when the internet has expanded, then we started toward digital lending. How
Yeah.
do we bring the digital touch to that? So digital lending, to some extent, it's like, okay, do you have a quick access to my loan portfolio, or can I apply a loan? Right. But
Mm-hmm.
still today, if you see, the digital journeys are not fully digital. Some of them still offline, or
Yeah,
the
true.
agents will keep calling and collecting the data through offline, right?
True.
Through WhatsApp channels. And even the LOS, LMS, and some of
Mm-hmm.
other systems are talking in silos, right?
Mm-hmm.
And if there are multiple systems are involved, if they have to talk, either they talk through SFTP or any other ways, right?
Mm-hmm.
So that these systems are disconnected. So what we are trying to solve here is, in earlier age we didn't have digital, now it has digitized. Then there were like particular problems in segments, like for example, if you take perfumes, they were trying to solve the bank statement analysis, right?
Right.
They scaled vertically on that problem statement. So now all these systems will come together and will form a platform where all these systems are connected, talking to each other.
Mm-hmm.
And the especially what we are trying to solve here is like, how do we bring borrower and the lenders onto the same platform, where
Mm-hmm.
borrower can easily interact with the potential lenders or potential products he can avail, as well as at the same time the lenders are also have a better underwriting access
Mm-hmm.
and connected to the other systems, so that they can
Mm-hmm.
do seamlessly the fund flows.
So it will create like an ecosystem and also like promote
Yes, it's a
communication.
ecosystem. What we are seeing, that next big thing is like, now we have scaled a particular system, like LOS someone has scaled, LOS,
Right.
LMS someone has built, then the Perfios built the bank statement. So similarly, now all these systems are there. Now what we see is the next revolution is going to be how a single platform can connect all these things and
Right.
bring a single platform where unified lending happens.
No, that makes sense. That makes sense. And
So
you also mentioned in the profile, it's like unlike traditional marketplace, it mentions like Lokta is enabling end-to-end lending, right? Like what gap did you see? I think you already covered it a bit, like, but specifically just asking in that, like what gap did
so
you see in the market?
Yeah. So if you see today, if Bank Bazaar or Paisa Bazaar, they
Yeah.
source and they give the lead, and then their journeys end, right?
Yeah.
Now then the institutes follow up and do calls and find out what is happening. In our case, like, if when we start with the marketplace, when the borrower comes, then lead is not, once we hand over the lead to the institute, it's not, our job is not done. We ensure that that lead is gone through a journey, and underwriting is happen, and the decision is made, and the funds are flown to the customer.
That
That's the
makes sense.
journey is what we want to cover, right? If you see, like, it's very highly ambitious if I say, but still I want to say that, okay, if I visualize myself on the lending side, I want to become an Amazon of lending.
Yeah. Yeah.
That's how we are visualizing.
No, that's amazing. I mean, if you don't visualize it, how will you get there? Right. So
Yes, yeah,
visualizing is
true,
like
true.
always good. That makes sense. And it's also mentioned like Lokta is making like lending easier for both sides, like borrowers and lenders, right? Without compromising on trust or
Yeah,
price.
yeah.
Like how does it do that? Like how can you share
So
that?
yeah. So with the same example, right, where
Yeah.
Bank Bazaar or Paisa Bazaar, they take the lead,
Mhm.
then some of the agents will call offline and they ask to share the documents over WhatsApp. Then again, they'll
Mm.
coordinate with the lenders, right?
Right.
So there's a lot of time is consumed during this process, and
Right.
a lot of unsecured practices are happening. They are not meeting the compliance. With our platform, the borrower will have a faster approval or rejections. They'll see that faster, and fewer documentation, and one consistent experience is what they get.
That makes
For
sense.
what it means for lenders is like, is the automated compliance. Like, they will do a when the documents are coming through a digital channel and it's already compliant. For lenders, it's like they are meeting the compliance, and they don't need to really worry about not meeting the compliance, right? And it's for their operations is going to be a very low operation load, because everything is digitized. Their operations no need to keep to and fro to get the information from the borrowers.
That makes sense.
So that's what will be solving here.
No, that makes sense. So speed will be like a key criteria for you essentially.
Yeah, basically we are just trying to abstract all the complexities, so that
No, that makes
each
sense.
lender no need to reinvent, right? They can ride on our platform, and our platform can solve majority of the problems on collecting the details from the borrowers and underwriting that, and maybe plugging to the multiple DSA channels,
Hmm.
right? And connect into the multiple other service providers like perfumes and all, right?
Right.
Different integrations will be already built in, connected into the system. So
Right.
we'll abstract all that complexity where what we are visualizing is like the lender will come onto platform, he'll just deploy the funds, and the rest of the compliance and everything is taken care by the platform.
Platform. No, that makes sense.
Yeah.
That makes ease of access, ease of use, and everything
Mhm.
else, right? That's
Yes.
amazing. And then speaking specifically of this, right? But going like taking a step back, India's lending ecosystem now is evolving fast. Like a lot of companies are coming in, players are building, right? What's something that you see changing behind the scenes that most consumers and also founders don't even see?
Okay. See, today RBI is pushing a lot of regulations, right? They are
True.
pushing towards cleaner and regulated environment.
Mm,
Basically, the borrower is the center and for that regulations, right? So
mm,
they want to ensure that borrowers' rights are and their personal information is protected, and so that's a and their interest is, I mean, the borrower's interest is protected. For that, on regular basis they are bringing the new compliance
true.
after bringing this digital lending. A lot of unethical practices started and
Mm,
trying to give the loans to the people who are already having or borrowed, right? So RBI is heavily coming on those things, whether a lender agrees or don't agree, or whether they really appreciate or not.
right.
But RBI is definitely will keep on doing that.
No, that makes sense.
So that's the one fast thing which is keep on changing. What
Hmm.
I'm sure if, founders might be knowing about this, but if someone thinks that okay, let me first lend, let me take care of the compliance later, then that's
Mm,
a bad thing. Which, or I would say that that's a risk what they are taking, and
true.
we have seen that many organizations or many fintechs paid the
Hmm.
price for.
Yeah.
Those kind of unethical practices, including
Yeah.
if you see Paytm and all,
Yeah.
RBI has fined, and some of the NBFCs they stopped the disbursements till until they become compliant. So
100%.
compliance and regulations is one which is important, and before you lend you have to, so don't think that okay, RBI is not watching or not looking at you doesn't mean that they won't come back to you, right? Definitely
No,
they'll
that
come
makes
back.
sense.
So this is what a lot of this is what really changing in the ecosystem.
No, that makes sense. And I feel like a lot of people, like what they assume is like they are small, so like no
Yeah.
one will like notice them. But like it's like okay, if you're not building that foundation, then like you won't build it later on, right? You might just get caught in the loop of scaling, and which again it just brings me to the next question: is like according to you, like what do founders underestimate when it comes to just launching or scaling a lending product?
So I think if someone is not coming from lending background, if they
Mm,
see that there's a problem statement, and if they think that okay, lending actually lending is not the his main business, right? The main thing here is like how well you underwrite and how well you collect. Collection is, it's not that a customer become default and how well you collect. That is not the point here. Is like how do you ensure that that customer is not getting default, right? Or how you find a right customer who will pay you back,
right.
collect that money. That's very important.
Mm,
If I feel that like some of them underestimate on this, and some of the fintechs they scaled very fast. Like in last few years, they
mm,
scaled very fast, especially on the BNPL or even personal loan side, and they drastically collapsed as well. Some of them have to shut down their operations because of these. They were following the ethical practices, but they underestimated these points, like which segment they are like lending and what is the ability to repay the loans, right? So if
mm.
they are missing that, if they think that okay, oh, okay, let me borrow some funds and let me lend it to the borrowers, if they go with that mindset, then they'll be doing a huge mistake.
No, that makes sense. I think a lot of it also like comes down to like them relying on luck because I do speak to a lot of founders and they normally just tell me when it gets to that place we'll handle it, right? So it's like they don't assume it will happen, right? Or they don't take it into consideration. So when it does happen, they're like not prepared for it, right? So that's another thing that I see. And like speaking specifically because you mentioned like speed is like important when it comes to like user experience, compliance is important, right? And lending is one of the most regulated spaces in India, right? How do you think founders should navigate that speed versus compliance?
Yeah, so to answer that, you should be agile, you should be speed in rolling out the your product.
Hmm.
It's not that you're rolling out new products, but you should be iterating the product what you are rolled out, and how do you see that you meet the changing environments, right? So there you should adopt the speed. But when it comes to compliance, you have to be very cautious. My request or like my suggestion would be added to the compliance from day one. You embed into your operations and you
True,
are
true.
meeting the regulations, and go slow on that. If you're not compliant, ensure that you focus on compliance. But on the product side, do faster iterations to
Hmm.
see how your product is behaving and doing in the market,
No, that
and
makes sense.
within the boundary of compliance and regulations.
That makes sense, but I feel like there's a lot to be done, or even on the compliance and like legal side, right? Because there's with end-to-end lending, documentation, KYC, and writing, like it all becomes important, right? Then, like from your experience, are there like common like legal blind spots like early stage founders often miss when it comes to it?
Legal blind spots, how do you interpret the RBI regulations?
Right.
It's like many of them interpreted in different way. That's one thing. And initially thinking that okay, I'm a small player, why RBI will come to me, right?
Mm.
Those kind of thinking, if they go with that, and even the KYC storage, okay, it's maybe there are certain norms which you have to adhere to. Basically, when you
Yeah.
are doing a PI data, right,
Yeah.
personal information data, if you are handling those details, so you can't neglect that. So but many of the people I see that they miss out those points,
Mm.
considering that either they are small or they're not having access to the good technology. They might be having a cheaper technology, but not a right or good technology. So in those cases, they have to pay price later point of time.
No, that makes sense. That makes sense. And I also like feel like I see it also like in communication and conversations I also have, right? It is like the thing that you mentioned is quite common that I also like see in the market now. But I also see like a lot of young people are also trying to build in this space, right? Like 19, 20, 21 years old. And like if you have to give them like the young fintech entrepreneurs an advice, like what is the smartest compliance decision they can make early on in their journey to avoid pain later?
Okay. So my advice is be compliant from day one. Ensure that you have someone from the who understands the compliance in your team. That
Mm.
makes your life much easier,
Right.
and that helps when you start scaling. You don't need to worry about the basic compliance, right? Once your model is good, you're proven. Once you start scaling, if that time you're trying to fix the compliance, the price what you pay will be much higher.
Much higher.
Right, yeah, much higher. So suggestion is like, let's not take any risk or take any kind of don't underestimate, don't think this as a compliance which you have to just RBI is asking we have to fulfill. It's not like that. Think that that's one of the feature in your product, feature in your
True.
business.
That's a good point. That's a good point. That's amazing. And then across all the systems that you have built, is there like a moment where something went wrong in the journey? And has that taught you anything that you still carry today?
Yeah, again, with respect to this compliance, I would say,
Okay, it was compliance related only.
yeah.
Okay,
So
okay.
one of the lender, they're doing the lending through a LSP partner,
Hmm.
and they were not compliant.
Right.
Yeah, so because of that, then they have to procure a LMS system,
Hmm.
then be compliant, migrate all the data to the new system, and adhere to the compliance, though their
Hmm.
LSP was not compliant. And
Hmm.
it was too late by that time. Even LSP got noticed by RBI, and they stopped the lending operations. So
Okay.
that impacted both the entities. It's a one big learning is like my again to all the lenders, ensure
Hmm.
that don't think that okay is I will outsource the risk or I will outsource the collections, right?
Right, right, right.
You should own the risk and you should own the collections, though your partners are doing, but you should be like you are at least you are owning that risk in
Hmm.
case if something goes wrong, right? You should underwrite and you are adhering to the compliance.
No, that makes sense. Better to be safe than sorry, basically, right?
Yes,
At the end
yes.
of the day. No, that makes sense. And then what's one belief about lending or like credit that you wish like more founders just question or challenge even?
See, tech can accelerate the lending, but it doesn't replace the fundamentals. It doesn't replace the best practices and the compliance. So tech is an enabler. Definitely that help to grow faster. But don't think that okay, by just taking a tech, I'll do everything right. You need your fundamentals also right.
No, that makes sense. That makes sense. Perfect. This was amazing. Then, final question for you. I'll keep it general. I'll keep it generic, just so that
Yeah.
if there is anything like you have to like really share, what's like one final advice you would give to like founders building in this space, whether like maybe even your competitors or like collaborators, anyone?
So, at least in fintech, like look for when you are building a fintech, look for a like a durability or
Okay.
like long running rather than a short gain or like quick. If you are lending too fast without understanding how the lending works,
Hmm.
because giving money is very easy. And, like
Yeah.
you find hundreds of people who will come and look for money,
Right.
but ensure that the system operations process what you're building, you have a right operations, right process in place, and you have right people to do those jobs.
That makes sense.
It's not like that. Okay, lending is not a. I know I'm a very fantastic tech guy. I can build a world class disbursement
Yeah.
product or disbursement mechanism, right?
Yeah.
Or the tech. But building tech is, especially in lending, is an enabler. It's not something which will is like if you're not adhering to the basic fundamentals, it's not going to help.
No, that makes sense. Like you have to get the foundation right before you like do
Yes,
anything,
yes.
right? That's the main thing. No, that makes sense. Thank you so much, Ashokji. Like this was amazing. I learned a lot from you too, just from it by listening to everything. And I'll have everything in relation to you, like your website, LinkedIn, and people where people can check like your profile and just connect with you. I feel like they can just learn a lot from you in the description below. Again, thank you so much for joining the podcast.
Yeah. Thanks, Akhil. Thanks for having this podcast.
Yeah,
Okay, and
thank you.
I'll wish you all the success in your
Thank you
future
so much.
podcasts.
Thank you so
Thank you.
much. Ashok.
Thanks. Bye.
Thank you.